And we're live. We're live? All right, let me pull it up, confirm. All right, guys, welcome back to Hero Labs. I guess we'll call this one Hero Labs Live. A good old solo stream on a Tuesday. I just want to pull it up on the side here, mute it so I can see the chat. So good morning, everybody. Welcome back. Today, we're going to talk about some tools. Talk about a few tools that are in my wheelhouse that you've seen videos on, perhaps on this channel a couple years back, but we just want to put out some updated, fresh content on it. And they're fairly universal. The key is, and this was mentioned in the tweet for the stream, is that they work in uptrends in particular. Now, they can be used inversely and be used for bearish setups and downtrends, but let's be honest, trading the bear is more challenging. And personally, I struggle with it too because I'm long-term bull. So I lack conviction on short setups as they come in. So today we're going to talk about three tools here. We're going to talk about the reload zone. We're going to talk about the pump chaser zone, which is my own iteration on that. And then we're going to talk about the Chaos PRZ. Now, credit where credit's due. These are all tools and concepts that I picked up at my time at TRI, taking the level 1, 2, and 3 course. As you know, I highly recommend you do that because tools in and of themselves are just tools, but they lack the overall trading plan that really every trader should have. And every trading plan should be personalized. So you won't come out of this video with a personalized trading plan, but you will have a few tools to play with. And as with anything in trading, it's a good idea to start off small, testing, whether that's micro-sized bets or just paper trading, which you can do right here on TradingView. If you go down here to the trading panel, you pull that up and you can just click here, paper trading, connect. And it'll give you like a little fake account that you can trade directly on TradingView. That way, as you're learning the new tools, if they're working well for you, you made some money, good for you, fake money. But if you lose, you're like, hey, at least I didn't lose real money. And then once you've got a little system, maybe you've done 20, 50 trades, you're feeling confident with that setup, then you go into the market and can apply it. So that's my 2 cents. That's my opener. Let's start with a few settings. So the nice thing about TradingView is you take something like a fib tool, which is what all of these tools use. And out of the box, it's going to look like this. Let's say apply default. So kind of weird, kind of ugly, not at all what I would want to use. So I click on it and I pull up these settings and you can play with these numbers, colors, and all that. Now I included this picture on the side because these are the hex codes for the colors I use for anyone who wants to sport the OG Hxro green, pink, and purple as a third color. Kind of unofficial, but I like it on the reload zone. And yeah, just pause the video here, write those down if you want to use them. Save them as custom colors, and then you can apply them. And the nice thing about TradingView is once you do create the exact settings on fib that you want, you can just save as. And so you see here, I've got a bunch of different templates saved. There's my reload zone, which can be drawn in either direction. Then I've got the pump chaser zone, which just has the 382 and 0.5. And then right here, I've got the Chaos PRZ. Now, typically when I first discovered this and started using it over at TRI, I just used 4669 and 877. But more and more recently, I go back and watch the shows they're doing now, and they've also got this 2618. I've never actually traded out that myself, but it's on my template now purely for, I guess, studying purposes. So I can kind of watch and see how price reacts with it, but I don't really use it too much. So those are the three tools. We're going to go over them today, talk about how they can be applied, and most importantly, you know, the inherent risks that still exist, even though they're fantastic tools. So thinking in terms of location, divergence, and structure, those are the three things I want to see when I take a trade. And I have an example here somewhere. I'm just going to pull it up real quick. Let's see. Yeah, I wrote this one out a little while back. I think we should just put it on here. So I'm going to copy paste it onto the chart. And if you want to study this, there's a lot of information on it, but if you want to study it, couldn't be pasted way too large. Wow. Thanks for that aggressive feedback there, Windows. Okay, you know what? Maybe we'll post this on Twitter after. It's just like a little laid out trade that worked out perfectly and kind of has all the bits explained on it. But really, the fib tool is just a location tool, right? So you take, for example, the reload zone, you start at the low. I'd recommend using this magnet tool here. So you get an exact PIP low. And then as price accelerates and advances and makes a top, you measure from the top. And essentially what you're measuring is the percentage of that move up that the market is likely to take back. So the 702, that's 70%-ish. The 0.5, half the move back and all that. And so you'll see these on my charts all the time as this reload zone. It's like you've had an asset, rallied big time, don't want to chase it, so you wait for it to settle back in. And guess what? Without fail, anytime price arrives back down in these kind of areas, it's fear, it's panic, nobody wants to buy. If you talk about things you're buying down there, most people call you stupid. They say that thing's dead. But time and time again, positions that are taken in these kind of areas often end up aging fairly well. At the very least, they age a lot better than people that rush in late into a rally. But I feel compelled to share one example, very important example, where they can hurt you, right? So Popsicle Finance in its heyday went on an absolute moon mission. Came back into the reload zone, bounced around a little bit, but ultimately failed and is now way, 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 way down. And that's where the conversation around risk management comes in. So before any trade I get into, I have a pre-established set of criteria, first off, that make me take the trade. And before I even open the trade, I got to know where that criteria or where my idea gets invalidated, where I'm wrong. In this case, if I was bullish on this low here, saying, hey, we're in the reload zone, we bounced, I'm going to take this and I'm going to, oh, this is set to chaos. The only problem with this tool, Chart Trader Pro, is you can't save the templates like TradingView. So I'll just do a quick swaparoo here. Actually, I can do one better. I can just clone this. Oh God, the settings go away. Anyways, point is, from down here, I would have said, okay, you know what? That's just a low. Let's see it come up, and then I'll take the reload zone of that against this low. And if this low breaks, I'm wrong. Get out. Cut that loser. And in this case, thank God I did or would have, because as you can see, it's just kind of flatlined since. So there is no surefire way to say, hey, every time it's in the reload zone, I should buy and it'll just go up. So be aware of that. You still manage risk in these areas. It just gives you a really nice place to manage risk from. So when I'm looking to buy something, especially if it's more of a long-term swing trade, I'm generally only excited about buying things when they're way off their highs in a reload zone. And then obviously on the back end, you're like, hey, that team's still building. They've got a product. It seems underpriced. I'm going to take a shot here. So the reload zone creates a location where I can get interested. And again, there's more to it in the sense that you want to see like some bullish divergence as it arrives. Ideally, a little W suggesting the trend while down there is about to turn back up. Volume, all that. So those deeper details can be found on the old videos that I made, which we will post here, possibly on a little click through, so you can go back and watch those. And then the ultimate source of truth for this stuff is to go to TRI and sign up for their term. Their next term starts in September. So it's not a bad idea, especially in this bear market where trading is relatively shitty, to just spend your time honing your skills and all that stuff. So as you can see here, off the 2019 lows, instead of FOMOing in through this, you just say, look, I'm going to draw up that thing. And if we come back into this reload zone, I'm going to have a predetermined plan on how I'm going to behave. I'm going to make sure I don't flip bearish at the wrong time. I'm going to start setting some bids. I'm going to start thinking about taking positions. And if we lose those lows, I get invalidated. Now, what's really cool about this, so really entry tool, reload zone, thinking about where I can be getting bullish on things. Now, how do you get out of the trade, right? A trade's only a good trade if you eventually find a way to take profit. And guys like to talk about, oh, I know it's going to go here. I know it's going to go there. But trading's not about knowing. You don't get to know, right? You just got to guess. You got to make informed decisions. Something like, hey, the probability of price topping out somewhere around a chaos level is high. Or even if it's not and it keeps going, did I make some profit? Right? So it's a great take profit tool because it generally creates like a pie in the sky target all the way up here. And if I had gotten really bullish and started buying things down here, and then when shit was getting really frothy up here a year later, started cutting some profit. Yeah, I missed the exact highs, but I got out. And a year later, looked like a genius again. And guess what? Take the low from the last cycle, the high from the top of that cycle. And wouldn't it have been nice to be shopping for entries through that reload zone? There was bullish divergences. There was a W. There was a breakout. Right? And so this stuff just happens repeat all the time on lots of assets. Like I said, easier said than done. Doesn't always work out. But with these tools applied to otherwise kind of chaotic behavior in the market, it gives me a big edge. So that's the high level on the reload zone. And Gunny, who's on the stream a lot too, absolutely loves this 88.6 level. He's like, if I see an asset that's just had a crazy rally and it's depressed all the way back down to an 88.6 and I can tell that the team's still building, the product's still there, he's like, I love just picking things up there and then just waiting. And then when things get frothy again and it's crazy, maybe coming into some chaos levels, you just start to pay yourself and wait, and eventually comes back down, as crypto does. Now, Solana had some interesting chaos levels play out as well. So here's the other thing. And this is why it's so important to play with these tools and test them and kind of collect some data and decide how they work for you. There's different ways you can kind of grab the Chaos PRZ entry, or excuse me, like measurement points. For example, you could take a whole bottom consolidation and then spit out a chaos from there. Or sometimes even mid-rally, after it's already gone up quite a bit, it consolidates. And you can just grab the low from that and the high from that. Take that 4669 template, in this case, the Chaos PRZ, and then say, you know what? I don't know if price is going to get up there, but if it does, I'm going to have a take profit set. And in the case of Solana last cycle, it gave me a really sweet take profit right at $200. And sure, a little bit later, kept going higher, but looking back, anyone who took profit up through here got paid and didn't give tons back. A more recent example of one of these tools that I've enjoyed for Solana, although I admittedly didn't play it as well as I should have, is you had price coming down after the FTX implosion, max fear, max FUD. And then after this, you're thinking to yourself, or I'm thinking to myself, like, if somebody hasn't sold now, right? All these things that had happened, if somebody's still holding at this point, there's a good chance there's not much that could make them sell. So and then you see this blast to buy volume come in. And so you're thinking, okay, this is a reasonably high probability area for the market to bottom. And so you have price pop off, hit this level, set up the fib tool and say, okay, if we come back into that reload zone, that's a time when I want to start thinking buy. And I remember this Friday night because every alt on a SEX exchange, like a centralized exchange, basically dumped 20% in one go. And where did it land? Across the board, reload zones. Didn't have a lot of time to pick it up, but if you did, pretty low risk against its own low or against this low, and then started to take off. So these reload zones are a great way to create a framed risk setup. In other words, you have a low, you get in at a higher low, and then you know if it breaks below here, you must be wrong. So you might as well cut that as a loser and let the next setup take shape. Now we kind of broke out of this consolidation, which makes me tempted to use that, the low to the high, to spit out a potential Chaos PRZ, which I can see is already on the chart here. And interestingly enough, it lines up with a pretty big level from back through last cycle. So if we break up from here and over the next whatever it is, 3 to 12 months, hopefully not 18 or 24, but could be. But as we break up from this consolidation, this is an area where I'll be looking to take profit, regardless of how bullish I feel or the price targets I hear about from other people suddenly saying it's going to be $500. Probably the same people down here that are saying it's going to $4, right? So you just got to really remove that noise, have the plan in place. And these tools just give me places to make decisions. Reload zone areas, I'm thinking about how I can get long, measured risk. Chaos PRZs, I'm at least taking some profit off the table. And if it goes higher, great. I still got a bag. So Chaos PRZs are great for searching for areas to take profit, and reload zones, areas that are great for, patient people getting paid off, getting lower entries. And there's one other example on here I wanted to share with regards to this. It's Prime token. Where is it? So this one's been ripping right now. It's got a really sweet consolidation. So they launched their token last year. There was a ton of Prime kind of given out through farming using cards and all that stuff. So naturally it started off with a big sell-off. But it built this beautiful base down here. And you actually saw a technical breakout right here. So this is the daily chart. And you had a little W come in along the lows and break out. Not that compelling, but then at this daily candle close, you had sort of a higher high. So it's not the cleanest one because this was a slightly lower low, but the point is you can see the W's forming up here, right? And so if you're aggressive, you're liking this coin, you're thinking, okay, I like it, but I don't want to buy it here at this breakout. That seems like, where's my invalidation all the way back down? So this would be a great time to take out a reload zone and say, if it does come back to my area, I can now pick up a position and have a much tighter invalidation with obviously extended upside. Another key to this kind of thing is not really marrying an idea, right? If I get it in my head that I have to have Prime, I'm more at risk of making like FOMO buys. If I treat it like it's just any other asset and I accept that there's always going to be another trade and the market's never going to go away or close, then I can say, if it comes to me, I'll take it. If it doesn't, on to the next one. So you had some opportunities down here off some W's to start picking up reload zones. Big consolidation. And it broke out from that. So up here where there's no real old price action to work with, how do I decide when I want to pay myself? Chaos PRZ, that's right. So I take the low of this big consolidation. I stretched out to the high. I've got my levels 4669, 877. And I just used a little line here like this. I attach it to extend. And now these are chaos levels that if price comes into, I can have orders working or alerts to make me go sell on chain. And again, it's just giving you reasons to take profit. It's very hard during a big uptrend. A lot of people, they just jump into chats. They ask for sentiment. They say, what do you think? What do you think? And you're always going to get people telling you like moon targets. No matter how high it goes, there's always someone who just bought the bag and is now convinced it's going to give them the 10x. So you want to have that kind of take profit target in your head. And if I do take some off here and it blasts through, still got paid, still got some left. If it hits the next one, take a little more off. So these kinds of tools I've found over the last few years, incredibly powerful, especially in a bull market, in particular in a big uptrend. So this year is kind of the washing machine cycle. If you've been trying to trade Bitcoin, you've noticed that. Let's go back to Bitcoin. Where's a good Bitcoin chart? So very challenging trading this year in general. I mean, yeah, we had a great year. If you bought this kind of breakout after the FTX, you're still up. But it was like a burst and then torture, then a breakout, fake out, then a breakdown, fake out, then a blast. So this is the washing machine cycle. You try to get into a midterm swing position here, especially with leverage, and you're probably just going to get stopped out before the move comes. So we've had this breakdown here. So now I might be thinking, when do I get interested in Bitcoin again? If I want to make a longer term bet on it. And trust me, these always seem unlikely. So in this particular case regarding the reload zone, I'm not saying I'm calling for these prices, but I have it in my head that if they get here, instead of changing my whole thesis on Bitcoin and saying, oh, I must be wrong, we're going to 15K, because that's what's going to be the sentiment around 20 or whatever, I've got a plan to start thinking about positions, looking for bull divs, looking for slowing momentum, maybe a W reversal. And this doesn't seem that out of the question to me right now, to be honest. Something like this through the end of the year at least September. September usually sucks. You get into the December season, starts talking about tax selling. January is a really nice investment window historically. So that's kind of like right around here. That's kind of the line in the sand where I'm looking to deploy, and the lower the price by, then the better. But in this case with Bitcoin, get into this reload zone, start getting really interested. Since here, so I have to then drag my tool up. And there's an interesting intersection for those of you who like little trend lines. I don't use trend lines to trade too often, but sometimes I apply them for confluence or to give you a time sense. So I think this will arrive in the reload zone. And according to this trend line, it may arrive somewhere through here. So I could say sometime through September, I expect this could be a good area for a trade location. And I want to see some momentum shift, right? Bull divs. I want to see a W. But the base tool is like trying to grab it in one of these reload zone locations. And like I said, if we do form a big consolidation here and break out, the Chaos PRZs are up at like $80, which is dope. Doesn't mean they have to get there. It just tells me I know what I'll do if they do get there. Coin is another interesting one. It's a stock, Coinbase stock. On a weekly level, this is one of the better looking charts you'll find. Coming into the lows, making a new low, no real selling interest down there, and then a big blast of buy volume. This is a weekly chart, so you have a weekly breakout, confirmed bullish structure. So in this case, I started buying at the PCZ, which is the more aggressive version of the reload zone that I came up with in a rip-roaring bull market, which, to be fair, we're not in right now. But sometimes you don't get that full reload zone retrace like this. And so through the last bull, I missed a few really good trades because I was waiting for these reload zones and they never came. So I thought, how can I be a little more aggressive but still have some kind of managed risk location tool? So I came up with this concept called the pump chaser zone. So the PCZ is a 382 and a 0.5. Obviously, it's way more aggressive. Can be harder to manage risk on, right? Because you stick your stop right at 0.5, it gets pinged a lot. But the idea is like, I'm going to wait for the breakout. Instead of FOMOing in, I'm just going to wait for the tag of the 382 or the consolidation here and then chase that. So this is a more dangerous tool, I'd say. It's one I reserve mostly just for sort of rip-roaring bull markets where you don't get hardly any big sell-offs, just sharp dips and then continue. And again, if you guys watched the last video I made on the pump chaser zone, you'll see a ton of really good examples of where this works. But it's very time sensitive in the sense like I wouldn't use it much this year. I'm making an exception with coin because my trade on this is like a 2-year trade from a stock account that I don't really actively trade. So I just want to make sure I get in at this throwback. So I did pick some up around the low 80s a couple weeks ago. Just going to check the chat real quick. Yeah, so Tom Trades asked a really good question. He says, what if it doesn't hit your Chaos PRZ, stalls early, and then just starts to break down before that? And that happens. And then suddenly, again, if you don't have that plan, that contingency plan, you're tending to sell the dips because you're like, shit, it didn't hit my level. Now it's coming back. I'm going to sell it. So there's a few different methods that people use. Again, a lot of this stuff highlighted at TRI as like kind of trade management. So I'll give you one example here. I really wish I could take this picture I saved up here. Let's see if I can copy it. Take a screenshot. Desktop, screenshot, save. Let's see if I can open it from there. Da-da-da. Let's see. Yeah, I don't know. No, it's too big a file. I'm going to have to share it in the Discord after this, and maybe I'll tweet it out. But basically, let's pick this here. So we'll say Coinbase. It's a weekly chart, high time frame trade, but I want to get in on it. I've picked some up at the PCZ. I'm not that interested in it if it breaks below here in this particular case because I chose to enter up here. So if I'm going to frame that trade, say I picked it up at the 0.5, This is where I've decided I will be wrong, which is a huge drawdown, 38%. So I better be getting paid pretty well to take that risk. Hey, look, there's a Chaos PRZ up here. That's 3-1. So there's a lot of traders out there where if it hits a certain way, like on its way to their take profit, they won't take any profit early because that's not part of the plan. But at that point, they may choose to move their stop loss to break even. So they're saying, okay, if it gets to 2-1, which in this case is around here, I'm going to move my my stop loss up to break even. So in the case where it doesn't reach that PRZ, you don't hit your take profit, you at least have de-risked your position, get stopped out, whatever, on to the next one. And there's other tools you can use too along the way. Of course, this gets down a deeper rabbit hole, but there's another tool I like called the fib extension. So you take the low, get rid of some of this ink. Take the low of a move, it breaks out, you take the high of that, and you use fib extension levels. So 1,618 and 2,618. They're a little more conservative than a Chaos PRZ, right? Which is all the way up there. And so that's actually a place where I often take my first little bit off. So you're saying, okay, the market is likely to break out, come back and make a dip, and then the next breakout should be sort of an extension of that last high. So fib extension is another good place, and it's always more conservative than the Chaos PRZ. So if I was being really tight with this one, I'd say, okay, you know what? Maybe my first take profit is this fib extension. And maybe my second is the next one. And then I keep that chaos on there. And I say, but you know what? Pie in the sky, longer term, I still want the meat of my take profit or position to be available when things get wild. It's all the way up here. So that's one option, right? You can use tools that are a little more conservative. You still get your 2 or 3-1 risk reward. Take a little here, move stop to break even, take a little more here, maybe move stop and profit or trailing stop, right? So as you can see, I'm throwing out these ideas and you're like, well, each of those individually are complex. So I can't stress enough how important it is to go check out a school like TRI, maybe through this bear where there's not a whole lot of, easy money to be made. And then preparing yourself for when easy mode comes back, you have all these tools set up and you don't spend the whole bull market regretting that you didn't plan better, right? That's what I did in 2018. Signed up for their stuff, practiced it for a year, and I was flying for 2020, 21. I used all these tools and they did great. I want to pull up an example I was thinking of earlier. What was the coin? It was one recently. Shit, I forget what was the name of it. Chaos PRZ. Oh, you know what? It's in our ideas section. Let me go find it here. So we had it, I think it was, oh, you know what? It was Ocean. So last cycle, there was a delicious Ocean setup. So again, when I say easy mode, I look at the charts now, there's not a lot that's that exciting compared to something like this. So this is what we had with Ocean back in August 2020. We had this big, long, drawn out consolidation, but what did we have? We had rising buy volume here, new highs in buy volume here, a big blast of buy volume here, and you had it pushing up against this level, pushing up, rising volume. That's like a beach ball underwater, just looking to explode. And if you looked around the market this particular month, it was one coin after another pumping 10, 20, 30% a day. So you're kind of like, okay, this is what's happening right now. This one looks like it's going to go. So I wait for that breakout, get long around this retest, set the Chaos PRZ, and look how it played out. Ping, almost to the pip. That's why I remember this trade, because it was just a perfect example of had I had orders working here in the book to sell, I literally marked the top with that sell order, Chaos PRZ to the pip. And good thing, because it just died after that. Took the whole friggin' move back. So great example of how to be patient, waiting for the right time to get in, getting aggressive at the breakout retest, and then where am I going to take profit? Let's try the Chaos PRZ. So that's a sick example of it working well that I always remember. So that's it. that's the main tools that I like to use. I would caution against using the pump tissue zone anytime soon, because in a lot of cases, even with coin here, I have a feeling that I'm going to end up getting a chance to buy down here. Because equities look kind of shitty into the end of the year. September usually sucks. And there's a huge node of volume on the VPVR right in the middle of that reload zone. So my guess is I could have been more patient and got long here. And I do have another slug that I plan to fire in the mid to low 60s, 50s down here if it happens. Again, in this case, it's like a longer term position I'm trying to take for like the next few years. Because every one of these ETF applications that I found listed Coinbase as their custody solution. So I figure they'll collect some nice fees from that amongst other growth initiatives they've got. So let's check the chat for some questions. These are kind of some high level ways of thinking about and using these tools. And I guess there's a bit of an art to it too with the chaos stuff. Let me give you a good example. There were some good on-chain coins recently. Oh, PEPE. Let's check out PEPE. Because that one looked like it was never going to stop. But it did. And you won't believe where it stopped. I'll give you a wild guess. I had it on one of these charts. Let's see if it's this one. Yeah, let's check it out. So here I was, mid-curving PEPE during the whole run-up, drawing different Chaos PRZs on it as we went. Again, looking in the reload zone to start getting interested. And really, all this downside could have been avoided if I just said, okay, selling at Chaos, looking to get bullish again once I see bullish divergences, reversals, breakouts in volume in the reload zone. Decent little trade there. Again, I'm not that bullish on PEPE. I think it's one that's just going to kind of bounce a bit and go lower and bounce a bit and go lower until it's totally flatlined, and then maybe make a 2-year flatline dead base and then have some crazy moon in a long time. That's like my base case for PEPE. But as you can see here, my first Chaos PRZ I drew was from down here. It was like you have your low, you have your high, and that gave you some levels, which in and of themselves ended up being not bad places, right? Came up to this level, hit a lot of resistance. So if you had purchased the breakout and paid myself at this high, I would have had a good trade. But you can also use this tool midway through, like I said earlier, consolidation along the way. You take that low, drag it up to that high, and it projects a new set of Chaos PRZs. In this case, that one went all the way up to whatever it is, 0.00000038. And look at that, marked the high. So from this consolidation, Chaos PRZ, I don't think anyone thought it would get there that fast. A lot of people were just blown away. I remember this day. It was just like, holy shit, look at PEPE. But all I'm thinking in that time, had I had a bag, I didn't because I'm a mid-curver, is up in this kind of shit. It's like, that's chaos, right? That's insanity. That's why it's called the Chaos PRZ. And there's a great place to get paid. Almost the perfect top. So again, looking and using this kind of thing for pie in the sky targets. And you could have done it even one more time. So I have that one drawn on the tool here. From this consolidation. So it's stalled again. Take the low of that. Take the high of that. Little energy charge up here. And that energy gets expressed upwards into this magical 4669 number from chaos theory. And look at that. Marked even closer to the high. So there's a few chances during the PEPE rally to find out where in this insanity it would be a good place to buy or sell. And in 2 cases, they marked within 10% of the top. Pretty sick. And if you don't have a plan in place, and if you're just sitting on social media, this is where you're getting like absurd euphoria and FOMO. It's very hard to be the guy that's like, actually, I'm going to sell. So I like this tool because it helps me recognize it for what it is, which is just chaos, insanity, and usually a good time to step off. And it turns out it was the perfect time. So that's a more recent example that I remember that was pretty sweet. Any other questions? Can you take a look at REEF and MATIC? Yeah, let's take a look at some coins. Let's do a few requests, and we'll see if we can just apply these in live and direct. Looks like I have a whole bunch of squigglies on here from way back when. Let's get rid of those. The highest time frame I like to look at in crypto is the weekly. I see some guys out there charting monthly charts, but I just think too much happens within those. So the weekly to me is the powerful time frame. It's essentially like a monthly on equities because everything's just kind of like scaled down and crypto happens faster. So REEF I don't like, and I'll tell you why. It's just making lower lows on the weekly. There's no real sign of buyers trying to step in and make a base. And that's the thing you want as a trader, right? None of us are putting bottoms in markets, let's be honest. None of us are putting tops in markets for the most part. Who does it? It's the whales, it's the movers, right? And you want to see signs of them stepping in with size because they're more likely to protect their level. And so you're like, hey, look, that guy's getting long here. He's put a floor in. I want to get long from his level because if he loses that level, I can safely say it's time to get back out. So someone tried to put one in here on REEF. Lots of buy volume, big breakout. It lost the low. Not exciting anymore. Invalidated. And since then, it's just been dripping. So zero rush on REEF. Unless there's some kind of emissions that are happening and they're about to end, and then you can expect a base to take a while to form anyways. But I wouldn't touch REEF with a 10-foot pole, at least for now. And again, that's because the more and more I trade, the less and less I try to get attached to any one idea. No matter how cool some tech is, no matter how much I feel I need that bag, I'd rather just pick on the assets that fit the criteria I need to execute a trade. So let's take a look at MATIC. I feel like MATIC's coming into a reload zone, actually. So that could be a good one. Saw it coming off the other day. Yeah, it's parked in one right now. So this is the weekly on MATIC. Let's start with a fresh chart. So real high time frame, full range. We'll have to use log to find the lows. Then we can switch back. So if you really wanted to get like the full high time frame look on MATIC, although this was kind of MATIC before they turned to Polygon, so you got to consider that kind of pivot. Maybe less relevant now. Switch back to regular. It's imperative that you get the points you're measuring these from perfectly. So see how that's not quite a perfect top? I got to get in there and fine tune it. And then the bottom one, you can just use the magnet tool. So yeah, high level, high time frame, investment level, kind of like, 12-month time horizon. This is in a decent, what I would consider investable level, right? Up here, it's frothy, it's scary, not a great time to be deploying capital. In fact, probably a decent time to be taking profit. Just for fun, let's put a Chaos PRZ on this consolidation and see how that might have played out. Kind of sick. Okay. Yeah, so if you guys, we're going to pin the other videos I made. I made a specific 20-minute video about each of these tools that's probably much more in depth for those of you who wanted to dig a little deeper. And MATIC was one of the ones featured in that video. So from this consolidation, where was it? So right here to right here. Had I used this, and again, back then, and honestly to this day, I don't really use the 2618. I like 4669 and 887. So in this case, from this consolidation, if I buy the breakout and I say, okay, where am I going to get paid? Where do I want to take some off? My first level would have been here. Was it the top? No. But was it profitable? Yes. Hold a little bit. Didn't quite reach the next one, but eerily close. And much later in the cycle, as you can see, it ended up being that high that pretty much pip topped it. So not bad. So in either case, selling through these moments, if you were buying sort of early on through reload zones, pump chaser zones, almost always is, if you do it consistently, it's like, yeah, you're getting paid, you're making profit. Because one of the biggest mistakes and things that happen to people who just don't have a plan in general is they just never really sell until things look really ugly again, and then they panic and they get out after losing most of what they had made. So this is actually a really good example of a pump chaser zone. So the market was really frothy through early 2021, right? We were coming into the big bull year. say, oh no, I missed the MATIC breakout. How do I chase this? How do I get on board this coin without just blindly buying highs? And that's where I came up with the pump chaser tool zone. I said, look, I don't ever want to FOMO into a 20% candle day. But without fail, almost every one of these assets will at some point come down and at least test this 382.5 level. And take it a step further, you can even wait till it gets into here. Sometimes it just touches and goes, but I like to wait till it gets in here, forms a W, creates like a new bullish structure that you can then risk against so you can have a bit of a tighter trade, take more size without increasing your overall risk. And in this case, a pump chaser zone entry to a Chaos PRZ exit would have aged pretty well, and it did. So one example there from MATIC from last cycle. Now here's present day MATIC. Again, going back to the weekly here, let's see, logarithmic, so we can spot that low. I would even say this was consolidation, the breakout. We'll take, that's really the COVID crash to cycle peak. So looking at the full range of the last cycle, you can say we are in a high time frame reload zone. So as much as the general consensus right now is pretty bearish, especially on things like CEX coins, this is kind of in an area where, if anything, I'd be thinking buy. I think it's a little premature right now because it is still that kind of washing machine cycle year. I'm not that excited about high time frame like position taking and diamond handing until like sort of January 2024. If we get a nice tax selling season into the end of the year, some FUD, some fear, January is where I really want to like start positioning myself for the next big swing through the spring and hopefully for a 2-year cycle, but we'll see. But you can dig in a little deeper here and say, okay, I'm going to take that low from this year, which was June actually of last year, take it to the high we made this year. So now we have a high time frame reload zone. We have sort of a midterm reload zone, and they're starting to align. But what's missing here? Why I'm not that excited? There's no real bull structure. We're in a weekly downtrend. We're coming into making a lower low. This one I can give some time. And not that it's a video about volume, but as you can see here, the bears are in control. So, the biggest volume candles are selling. What you really want to see is like going back to that ocean example is like big fat green buy candles coming in, buy volume. That's a really strong signal of whales and bulls stepping into the market with size at levels down here. So if MATIC is super sick and it's going to be around for the next few years, probably is, at some point you're going to see big buyers stepping in by the volume, probably somewhere in this reload zone, probably with bullish divergence, probably with a W. And that's when you can sit here and say, okay, I'm going to get sneaky, get long, and then look for chaos in about 6 months. Yeah, there's really no rush right now, right? It's August. It's the end of summer doldrums. You can feel it in the market. The energy is lacking, right? Friend tech and a couple things, bot chains on chain, like the bot meta. There's some fun little games, but they're all fairly low liquidity. The bull, the energy, the momentum in the market, it's just not there right now. So I've been shitcoining a bit this summer, but I'm saving my big, day in, day out grinds on the computer trying to make it kind of activity. I'm saving that for more favorable conditions. But that actually means it's a perfect time for you guys to be getting in here, thinking about these tools, testing them, coming up with criteria. Because a trade is essentially this. It's a list of criteria, or a setup rather. It's a list of criteria that if met, you take X action. You don't think about it. You don't check Twitter and say, what does this guy think? You have your set of criteria. If all the boxes are ticked, you take your position. You get into that position knowing exactly where you end up being wrong. So let's say I just wanted to buy MATIC here. I don't think it's a good setup. It's more likely to lose than win. But if I'm going to risk to this low, which doesn't look like it here, but it's a 44% drawdown, so I can't take a huge position. But if I'm going to risk all that before I get out, I better get at least 3-to-1 ratio on that if I'm going to be right. Right? So if I'm getting 3 times the money I make on a win versus the money I lose if I get a loss, then my winning percentage doesn't have to be super high. If I'm getting into a trade like this, where if I'm wrong, I lose that, and if I'm right, I get this, it's like I'm risking $1 to maybe make $1. So at 50-50, if I'm right 50% of the time, I actually lose on fees, and just, it's not a very good thing. So finding your entries in ways that you can get a tight invalidation with a reasonable amount of multiples to the upside if you're right. MATIC right now does not present a very good trade. And I say that, and then, very easily tomorrow things could change, right? Oh, there's a new announcement. Apple's endorsing Meta or MATIC, and then suddenly shit changes and it moons. It's like, whatever, that's going to happen, man. Markets are crazy. There's always a bull somewhere. My job is not to get everything right or know what's going to come. It's to find areas where I think I have edge, and I can risk $1 to make $3 or more. And it's so much harder than it sounds, guys. So it takes some practice, and even after all these years, I make mistakes all the time. But one thing that I have ingrained deeply that's helped me a lot is the risk management piece. Like, I can have a terrible week, lose 5 trades in a row, and it's like I automatically just have it in my head. I'm never risking more than 1% or 2%, or if I'm super bullish and I think I have a ton of edge, maybe 4% of a trade account on a single idea. And if you can just master that, it makes it a little more boring, but it prevents you from getting eaten for lunch on one wrong trade. So an old favorite of mine is AVAX. It's actually the first trade I'd made an attempt at very recently. Actually, probably in over a month, trying to trade one of these old CEX coins, because I saw a W here on a high time frame reload zone. If you zoomed out, like if you took the whole thing, I think it was actually below. Damn. Point is, I saw it coming off. I saw a lot of talk of subnets. I said, you know what? Against these lows, I'm going to take a little long on AVAX here. Got stopped out. Lost a little, but because if I was right in that case, the trade worked out. Say my entry's on the 786. So I'm risking 12%, but what's my upside, right? If it forms a little base here and then breaks out of this high time frame downtrend, I could be looking at a multi-week, multi-month churn up. So as unlikely as that seemed, it was worth the risk for me at that time. So that's the last trade I lost doing this stuff. So yeah, it doesn't always work, but when you look back, I mean, I think I have one actually that was really sweet. It was ALGO BTC last cycle. See, it's come way off since then, but look at this last cycle. It was perfect. Was it ALGO BTC or ALGO UST? Yeah, it's confusing. I think it might have been this one. Let's see. So again, you can find these examples a little better, like ironed out in the videos that we'll link in the description for this. Chaos PRZ, reload zone, and all that. But I think we got a few here, if I recall correctly. So take that, and then spit it out. Was it this one? Not quite. Let's go look at that old video later. But yeah, basically this one was great because you had a bunch of chances to buy in the reload zone and basically sell at the chaos, reload in the reload zone, sell at the chaos, reload zone. Maybe it was ALGO USDT. But yeah, ALGO provided a great example last cycle of ways to just build positions. Oh, you know what's a good one? If you're thinking about the little old lady, DYDX. Getting a little bit off topic here, specific to chaos, but DYDX is a great example of the little old lady stuff I talk about a lot. Another brilliant TRI trade setup where you're buying around lows, right? So it sort of formed a range low here. And then selling half on a double. And a lot of people like to shit on selling half on a double because they say then it goes 50x and you sold so much so early. But if you caught any part of this move, so just say you got out after this W, bought the breakout retest, sold half on a double. So you sold half your position up here. You got your money back. You still have a free bag. And then what do? You wait. You set up your reload zone. You say, you know what? We're back in the reload zone. I'm going to load that money I took out back in. I'm going to buy a second car. Then you let that position play out. And look at that. From the W breakout, yet another double. So you sell half of that position. Now you've got 2 free bags working. And if it happens to come back to a reload zone, you do it again. So you take this low here, send it up to here. Now in this case, it kind of fell at the bottom, but it's a little lady strategy. You don't usually use stop losses. You just size small. Got the little breakout, retest. Do it again. Almost got 2 doubles there, but let's say you sold half on a double. So now you've got 3 free positions working in DYDX. And that's how a lot of guys I know from TRI are working this bear market. They're just buying lows, selling halves on doubles, reloading extra and extra cars. And this thing could do this for a year, 2 years. And if you're working this kind of very passive, casual trading system, you end up with multiple free positions, all your initial capital back to play and do with other things, similar assets. And maybe you end up with 5 cars before this thing finally does break out, if it does. And if it doesn't, you've completely de-risked the position anyways. So little old lady is actually a sick trading strategy for most people, especially if you work like a full-time job and you don't want to stare at day trading all day. So DYDX is sitting in a reload zone right now. Looks like the bears are in control, mostly sells on the big candles. Not like this. These were nice signals. But it's parked in a reload zone. So generally not a bad time to be thinking about how and where and when to get positioned for the long side for the next move. And then, of course, choosing a level where you're like, you know what, if it goes below that, I'm just going to get the fuck out because there's probably a better asset somewhere to trade. So have your invalidation, have your chaos. And just for fun, I think it's already up here. Let's take this consolidation, high time frame, say that low to that high. Why not? Chaos PRZ, yeah, I had it marked out. I like to label them for my own sake. And so there would be my first major take profit. If I'm not feeling as confident, or if I don't think we're in that kind of rip-roaring global liquidity rising bull market environment, I can use the fib extension. It's a little more conservative. And it's going to give me a chance to have a reasonable take profit area much sooner than chaos. And so I'll label that as well. So I actually used a lot of fib extensions last bull market. And then obviously throughout the bull, as it got more and more intense, these just got blasted through. Sure, okay, made some profit, but there's a lot of the Chaos PRZs that were marking highs. So deeper into the bull, the more frothy things get, the more willing I am to just wait for something like this, like a big crazy target. And even though I think it's a huge drop from here to here to risk through, that's still probably a profitable, like RR. Let's say it breaks here, take the 702. Below here, I decide I don't want it anymore. So I'm risking 29%. So that's a big chunk. That's not something I would do on leverage or whatever. But just to the fib extension, that's 6 to 1. So for every dollar I risk, if I'm right, I can make $6. Extend that to the Chaos PRZ for the second half of the position, 12.71 to 1. So super unlikely, right? But I'm risking a dollar to make 12. So I only have to be right like 1 in 11 times. Quick math, don't shoot the messenger. But you can take more of these kinds of shots with smaller size, and only a couple have to hit for it to end up being a profitable strategy. I'm mainly talking about spot trading for a number of reasons. I think spot trading is 90% of like the time that's where people should be trading, especially with alts. It's very tempting in these lower volatility environments to get into leverage because then a 2 or 3 or 4% move can really pay well. But it's also just this crazy like washing machine shit where it's just sweeping. So it's extremely challenging to get it right on tight setups right now. If you were short against these highs, they got nuked right before it dumped. If you were long against these lows, they got nuked right before it came back up. If you were long against these lows, they got swept right before it went up. So spot trading is just so much easier for so many reasons. And in the right environment, when things are crazy bullish, you don't need leverage on altcoins. They have it baked in, right? These things go 5, 10, 20x over a period of a year, sometimes 100x. So I generally try to stay away from altcoin leverage, but there are some perks. And I'm also in Canada, so there's not too many options to trade leverage. So first and foremost, I would say anyone who's new to these tools, go watch all of the previous videos I made on these with a little more detail. Consider signing up to something like therationalinvestor.com because they teach you this in depth over 12 weeks and you get to develop your own personal trading plan with all these tools suited just the way that they work for you. And beyond that, I'd say whatever you do, start with paper trading because then you reduce the stress, which blocks your ability to think, and you get data, which tells you if you're doing it right or wrong. And if you do 50 trades and you're profitable, 60-40 kind of win rate or whatever it is, then you can move confidently into some real money stuff and kind of have data to work with and confidence. Confidence is important as a trader because it always feels bad buying in these kind of deep, dumpy reload zones. And it's also very hard to sell at these chaos levels because when price is up there, everyone around you is like, yeah, we're going so much higher. So it takes discipline and confidence to just say, you know what? I think I'm going to get out. I think I'm just going to take off here because y'all are fucking crazy. This feels chaotic. Yeah. Leverage altcoins like double leverage. They're also fairly low liquidity. So if you're trying to trade with any real size, it's hard to get in and out. Huge fees, blah, blah, blah. Big funding. So I typically would suggest staying away from leverage for most people. And honestly, that goes for me too. If I look back at my years that I've had good years trading, probably 80 to 90% of my overall profit came from things on chain or spot positions on exchange, and leverage. I had some big wins and then tons of paper cuts and probably netted out near break even or just under. Because what's the thing with leverage? It's so addictive. It's so thrilling that after your big wins, you wake up the next day and you're like, give me the next one. Like it's just a little bit too thrilling for me personally. I get kind of hooked into it. And so I have this pattern of making a big win and then just giving it back. So spot trading, not so much because you don't stare at the P&L all day and it's not quite as, like adrenaline and dopamine and all that stuff. Much easier to trade spot. So for what it's worth, DYDX to me looks like it's probably found a floor because you can see that marked with things like huge volume coming in at lows. It's just consolidating. And the longer these consolidations go, if it does break out, often the bigger the move. Which reminds me, I got to check out Syscoin. Crazy example of this. So Syscoin had a hot run back in the 17-18 cycle. In fact, it was like, right into Jan 18, it went nuts with everything else. And then it just flatlined for like 3 years. But it was not dead. If you looked into it, they were still building tech. They now have a chain you can actually bridge to, and don't know if there's a whole lot going on there. But just say you were sitting there not paying attention to it because it looked dead, and then you saw this. You're like, holy shit, big volume, big breakout, but I don't want to chase it because I like to trade properly. So I'm going to draw from the low to the high, and I'm going to create a reload zone, which we'll just do live here real quick. Because not on TradingView, so the templates aren't saved. And I don't even know the colors. That's okay. Can I do that? Yeah. No. Okay. So here's your reload zone. Make the colors make it look a little nicer. And gray. 88.6 should be purple. Close enough. So now I've got this tool where it's like, man, I can't believe I missed that pump. I'll keep an eye on it because I really like this coin. And if it comes into this reload zone, I want to get a piece. Now, as it came into this reload zone, it's making lower lows, but look what the RSI was doing. Wasn't going any lower. It's kind of making higher highs. And many people will tell you correctly that it should only count for 11 candles, but I still like to look at the RSI that way too. Technically incorrect, but works for me. So as we were coming into new lows, the MACD had stopped. It was actually flipped bull. The momentum had shifted. So there was all these signs that not only was it in a good reload zone location, the momentum was shifting. Zoom in a little closer, and right in the dearth of that reload zone, you could see a burst of buy volume, your first hint that some buyers were stepping in. Next hint, more volume, more volume. So there was an excuse to take some position down here. Definitely a few reasons you could consider it, but maybe you're conservative. You say, I'm going to wait for it to really confirm that it's breaking out. So you do that. You wait for this. And then you say, you know what? Off that reload zone, now I know for sure. I know it's gotten down there. Now I know it's moving. Buy volume coming in. You still had another chance to load some in the reload zone. Now with some very nice risk to reward ratios because your invalidation is suddenly here. Right? Because you had some bullish structure form, breakout. So it shouldn't really trade back below here if your long idea is correct. So you have a nice tight stop, which is actually 33%, but relative to the high time frame, that's nice and tight. And then obviously you can see it went bananas. So where do I take that profit? For fun, on the fly, let's just say we're going to go from here to here. That's the consolidation. So where does that Chaos PRZ kick out to? Let's go see. You have to reverse it, move it to the left. So those Chaos PRZ levels would have given me take profit targets right here. There was some resistance there. It actually kind of became a level. Interesting. So if I got long through the retest of that little breakout, risking to that low, and said, I'm going to start paying myself if it gets into this chaos level. First take profit hits. That was 14-to-1 risk to reward ratio. Again, easy to cherry pick these things in hindsight, but Syscoin's one I always remember because it just had such an insane rally after like dying for 3 years. So maybe I close half the position here, move stop loss into profit or break even, whatever. And now I'm free rolling with, aside from like obvious systemic risk of the exchange itself, but I'm free rolling within, trade terms. And if it does come up to the 88.7, I sell some more. Not the perfect top, but looking back, anyone who was getting paid through this did pretty well. And this coin in particular, actually last cycle came and gave even another chance. So just say I got out here, I missed my Syscoin bag, I want another position, but my trade's over. So I keep an eye on it. I set alerts down in the reload zone, comes back down here, forms a W, does another little breakout, and off she went again. So as you can see, you can pretty much pull up any chart and spot these kinds of things. So it just creates criteria for which to consistently act on, either a long or a short. And you can do most of this the other way too. So you say, oh, this chart's in a downtrend. So when it bounces back up, in fact, okay, I'll do one last example for today. Just a quick sneak peek at how you can use this going the other way as well. Let's go to Coinbase Bitcoin. Show us last cycle, please. Nope, there it is. So let's take a look at the last cycle. Again, easy to cherry pick in retrospect, but this is how you could use that reload zone the other way. So it's gone off. We had our parabolic kind of blow off top. You say, I want to get into a short position, but I don't want to sell on panic day. All this bullshit. But if it comes into a location I can trade, I'd love to take that short. Bing. And this was when I was in my, no, this was before I joined TRI, but I remember seeing a lot of the guys talking about how this is where they decided to start offloading. Because you've had your breakdown in structure, you're now in a short reload zone. If it breaks to new highs, you can always get back in. But if you get some short hedges on here or sell some positions. So these reload zones and these kinds of levels actually do work both ways really nicely. So I'd say if you enjoyed this video, check out the previous ones that I made probably about 2 years ago now, but the concept's still relevant. And then, write down the bits that were interesting to you and then go find some charts. Set up a paper trade account or just reduce size because you're trying something new. So you don't want to go all in on it, obviously, till you know it works. And then, play with it. Come into the pit, drop some ideas, some, trade ideas that you've tried out. And can't stress it enough. The best thing you can do is find a program that teaches you this. And I'll always endorse TRI because after their course, I started doing well. So it also helped find the bottom of the last cycle too. So you had the burst of buy volume off the lows, wait patiently in the reload zone, let the breakout come, get long on the retest, which for fun, let's just play with the pump chaser zone. I think it worked perfectly here. Say, oh no, I missed the breakout. I really don't want to miss it, so I'm going to get long on the pump chaser zone and right here for about 3 days it lived there. And I'm invalidated if it goes below here. So you had a nice tight reason to get long against the lows while everybody else was just depressed and calling for 2K. And sure enough, we had a nice run. And how did that one top out? Don't try to guess the high. Wait for the fucking trend to reverse. Technically, it reversed up here because it made a high, a lower high, and then it broke down. So it officially reversed trend here. No need to panic into the first candle below to sell. You just wait for that short reload zone. Start thinking about taking some off in these, getting shorts against the highs, right? So this stuff works both ways. It's fascinating. And now most of the time when I look at charts, I barely have to draw the reload zones. I just kind of see them. I just say, like, oh, that thing looks like it's coming into an RLZ. It's looking interesting. So for now, Bitcoin is not. It is sitting at a high time frame pump chaser zone. But I don't really think we're in the environment yet for me to be that excited at trying to like race to buy these. But at least it's better than buying up here. So I did deploy a little bit into ETH down here. This is Bitcoin, but same difference. That's the major I chose. So don't be shocked if sometime, either through September or through the January, what I call investment window, we end up tagging, touching, or consolidating somewhere through this high time frame reload zone. And I guarantee you when that happens, if it does, there will be a lot of people sitting here screaming about new lows, which is ultimately why people don't buy in these zones. It's fascinating stuff. Like all through up here, it's like everyone telling you to get long, and then all the same people right here are just like, no, it's going to hell. Get out. And that's why trading is so hard. So play with these tools. Try to formulate a set of criteria that'll give you a reason to get long. Have your invalidation set. Tell yourself in advance where you're going to make sure you pay yourself. And then don't look back. If you take a little off and it keeps running, just remember you had a good trade. Because that is really what will torture you as a trader too. You're never going to get it quite perfect. So you got to enjoy the wins. And I think that's it. Dove into some of these tools today. Again, much more focused, detailed videos available on our channel. We'll highlight them either in little click-ins on the links or in the description. But I wanted to just kind of go over a refresher because this really is peak summer doldrums. August, things are saggy. September, usually a little worse. But rather than sitting around waiting to make the same mistakes as the last cycle, if you did make mistakes, I made plenty. You should spend this time finding new tools, honing your craft, practicing strategies, testing out ideas. So when easy mode returns, you walk away optimally or you operate optimally. Because there's no worse feeling than having what maybe happened in 2021 and 2017 happen again. And you spend that whole time making a series of the repeated mistakes. It's brutal. So hit me up in the Pit Discord. Tag me on Twitter if you see interesting ideas. And I'm happy to talk charts and trades and ideas with you there. I guess that's it for today. So whatever you do from now until next time, always play from a position of strength. Take care, guys.